Can you get a DSCR loan without down payment? Guide for real estate investors. As a real estate investor, you'll never be short of funding options. DSCR loans are another such type of mortgage, but like any other home loan, they come with hefty down payments. This is the main deterrent for new investors who may wonder, can you get a DSCR loan with no down payment? While some lenders may say otherwise, it's not possible to get a DSCR loan without a down payment. What is a DSCR loan? A debt service coverage ratio, DSCR, essentially measures a property's financial health. It's a ratio of the property's owed amount, debt service, to its net operating income, coverage. This type of loan focuses on the property's DSCR instead of the borrower's personal income. That means the lender will assess the property's ability to make enough income to cover the debt. This income typically comes from renting. Most DSCR lenders prefer a ratio of at least 1.2. Any DSCR over 1.0 means the property income can easily cover the debt, but 1.2 or higher leaves room for profit too. Benefits of DSCR loans. No personal income verification required. As we mentioned, the property's NOI covers all the debt of a DSCR loan. That means the lender does not need to verify your personal income or employment details. This is also a great option for new investors, since their personal tax returns don't show much income. No property limit. Most DSCR lenders don't limit the number of properties you can fund with the loan. You won't need to pay off a previous property to invest in the next one. Easier to qualify. DSCR loans don't require any verification of your personal finances, making them much easier to qualify for. All you need to do is find a profitable property that can cover the debt with its income. Since you won't need to provide too much liquid capital up front as the DSCR down payment, it even works for the self-employed. Quicker applications. It takes much less to qualify for a DSCR loan, which means they also close quicker than traditional mortgages. Lenders don't need to check your personal income or employment history. Diverse funding options. Beyond just financing multiple properties, DSCR loans also allow you to finance different types of properties. With traditional mortgage loans, you're limited to just residential units. Meanwhile, DSCR loans can be used for many different types, including single-family residential properties, commercial and multifamily properties, short-term and vacation rentals. Approval. According to the deal. If you're lucky, the lender may approve your DSCR loan even if it doesn't meet the requirements to a T. As long as it's a great deal, you might be able to get the funding you need. DSCR loan qualifications. DSCR loans are a lot easier to qualify for than other real estate financing options. For instance, DSCR loan credit requirements are very flexible. Most lenders would even accept 620 to 680. Meanwhile, lenders typically demand a loan-to-value (LTV) ratio of 75–80%. This translates to DSCR loan down payment requirements of 20–25%. You may have read otherwise, but it is not possible to get a DSCR loan without a down payment. It's extremely rare to find a lender willing to fund a property without a down payment, but even if you find one, it could possibly be a scam. Improving your chances of getting approved. There are two surefire ways of improving your chances of getting accepted for a DSCR loan. Minimize your debt and keep an eye on your credit score. Borrowers with a large amount of debt are considered high risk, since lenders aren't sure whether they can repay the loan. The property income may be substantial, but there's no guarantee whether it'll be used to pay back the current loan or an older one. Paying off some of your debt before getting a DSCR loan will make you a low-risk borrower. Secondly, a good credit score shows that you have a history of paying back your loans on time. While a 680 score is acceptable, anything higher will definitely improve your chances of getting accepted. The process of applying for a DSCR loan. Find a lender. First, find a bank or lender specializing in DSCR loan programs. Fill out a loan application. Once you've selected a lender, fill out a loan application. You'll need to provide proof of credit, real estate investing experience, and details about the property. Calculate your DSCR. Calculate your debt service coverage ratio, DSCR, using the formula provided below. The DSCR should ideally be greater than 1 clock, which means that the property generates enough rental income to cover the loan. Lock in your interest rate. After calculating your DSCR and submitting your application, the lender will offer you an interest rate. Get approved. If your application is qualified, you will receive approval for the loan. Loan funding. Once approved, the loan will be funded as a line of credit or lump sum. Finding the right lender for a DSCR loan. Finding the right lender for a DSCR loan is key to getting a good deal. The lender's interest rates and origination fees should be aligned with your financial limits. You may not find the cheapest options, but comparing your options may make them easier to afford. How to calculate DSCR loan ratio? To calculate the DSCR, you'll need to know the property's net operating income, NOI, and total debt. The NOI is basically the property's income before any interest or tax. Regardless of what a lender may tell you, you cannot avoid a down payment. Here's what you should know about this loan type before you make a choice. Higher interest rates. DSCR loans have better returns, but that also translates to higher interest rates than traditional home loans, around 7.7% as of March 24. High DSCR required. Most lenders expect a DSCR of no less than 1.2, which means the property's NOI can cover 120% of the loan. But if you want a good deal, aim for 1.5, which isn't easy to achieve in an expensive real estate market like Manhattan or San Jose. A 1.5 DSCR means the property income can fully cover the debt and still leave 50% of the loan amount. 6 months of cash reserves. In some cases, the renter whose rent payments are covering your debt may end their tenancy. That means you can no longer pay back the loan. Responsible lenders like to keep backup plans for such scenarios. For some lenders, this backup plan can be the money in your bank account. That means you may need to keep 3 to 6 months of payments or cash reserves in your account. This way, you can keep the payments going while you find a new tenant. Loan limits. Some properties are too expensive to be fully funded by a DSCR loan. Most lenders cap out at $1 to $3 million. These limits may seem restrictive to seasoned investors, but they're generous enough for most single-family homes, duplexes, or even triplexes. Prepayment penalties. DSCR loans are not consumer products, so typical consumer protections don't apply. That includes the ban on prepayment penalties.